Welcome back to the portfolio, everyone. And in this video, we're going over the top 6 cloud stocks you should be watching right now. The cloud industry is only expected to grow at a double-digit rate over the next 10 years. With the pandemic, the new cloud-based business activities are taking off, and this is a new way of conducting our everyday lives that is only expected to grow in popularity and expand moving forward. So in this video today, we're going to go over 6 market leaders in the cloud industry. All of these companies have seen insane growth over the past 12 months, and they are being traded at very high valuations. So these are companies where if you want to get into the cloud space right now, these are the 6 companies to take a look at. If you want to add these to your watch list, and when we see a dip in the market, then maybe they might be at a nice time to add to these positions or start a new position in one of these cloud-based stocks. So we're going to go over 6 different companies, all within the cloud industry, but they each perform different activities and provide different services to consumers and businesses. So for each company, we're going to go over their current price point, the current valuation, take a quick peek at their website and what they actually do, and then determine if we like them moving forward by analyzing their quick income statement performance and their future growth expectations. So as you know, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy and sell within your portfolio. And of course, we talk about all the big stock market news and headlines. And today, we're going to focus on the cloud industry and go over some of the top players that have currently seen a massive run up as of late and might be a nice addition to your watch list or into your actual portfolio right now for some high growth. The first one is Datadog, ticker symbol DDOG, currently at $110 a share. They are up over 200% over the past 12 months, which is absolutely incredible, and have a current market cap of around $333 billion. They have a forward PE at 901 and are being traded very close to their 52-week high right now. So what Datadog is, it's a simple to use platform that allows you to monitor all your different applications into one cloud-based, easy to use service. It's secure and allows you to take a look and monitor all your different activities on their simple to use platform, and they are used by some of the largest brands across the globe. If we take a look at their revenue statement, their revenue has been doing a nice job growing double each and every year. Over the past 12 months, they've brought in $480 million of total revenue, but this company still is young and actually posting net losses over the previous 2 years, but in the past 12 months, they've shown positive net income of $3.5 million, which is nice to see from kind of a younger growth company. Analysts expect the company to grow at a rate of 25% next year, which is a great growth rate to hopefully for them to achieve. The second cloud stock we're going to take a look at today is ticker symbol CRWD, Crowdstrike, up currently 127% over the past 12 months, with a current price of around $146 a share. Market cap of $31 billion and currently being traded at a forward PE of 2,271, which is absolutely incredibly high. So an extremely high valuation on this company. And essentially, to keep it simple, they are a cybersecurity firm for the cloud. That's the kind of the easiest way and the least complex way to say and describe what they actually do. And they're a cybersecurity firm trying to prevent breaches in your cloud-based network. So currently, they've seen nice revenue growth. Revenue has spiked as of late, and in the past 12 months, they have brought in $654 million of total revenue, but their bottom line of their income statement is still in the red, and they've actually been posting net losses of around 130 to 140 million over the past few years, but are expected to grow at a rate of 25% averaged over the next 5 years, which is absolutely incredible. If they can achieve these numbers, investors are going to be very satisfied with an annual return of 25%, which are some very high estimates, but this is of course as more companies adapt to cloud-based commuting and remote work, the cloud will need to become more secure, and CrowdStrike is a company that will grow in that industry. The third cloud stock to take a look at today is ticker symbol DOCU, Docusign, currently up 236% over the past 12 months, market cap of $41 billion, and a forward PE of 391. You can see a rapid surge as of late, and this company allows you to sign documents without actually needing the physical paper in front of you. So you can do an electronic signature to sign documents from all across the world. This kind of prevents paper transactions and of course helps with social distancing. And this is a brand that is supposed to be as secure as possible and allows you to actually get all your documents and conduct your business activities from anywhere. And this is what is going to allow remote work to continue to take off as we progress to a more stay-at-home economy. From their income statement, they've seen nice revenue growth year over year. Each and every year, they're posting beautiful high double-digit revenue growth and actually brought in $1.16 billion in total revenue over the past 12 months. While posting a net loss each and every year though as well, they are losing less and less money each year, but still massive net loss numbers for this company. But although they are kind of losing money right now, their growth rate is still expected to perform at over 31% per year over the next 5 years. Fourth cloud stock to take a look at today is Fastly, FSLY, currently $127 a share at 391% growth over the past 12 months. $13.3 billion market cap on this company, very close to their 52-week high right now. And this is a company that allows you to actually stream and download your files extremely fast. That's kind of what they want to do. They want to be the company that allows you to use your network and ensure files are streamed to users with minimal delay. So this is a company, again, that's kind of always focused on the cloud and improving cloud-based work. From their income statement, once again, all these companies have seen a nice jump up in revenue as of late, but this company is still posting net losses of around $52 billion in the past 12 months. Although expected to grow at a rate of over 30% each year over the next 5 years, high expectations for this company. Cloud stock number 5 is ticker symbol CRM, Salesforce, $267 a share and up over 253% over the past 5 years. On the 1 month chart, they're up 80%, and this company has a very large market cap of $242 billion with a forward PE at around 71. Their income statement shows that they are actually profitable. Total revenue is growing at an insane rate year over year, a beautiful upward trend, and in the past 12 months, they brought in $19.3 billion of total revenue with net income of over $2.3 billion. And they've actually been profitable over the past 4 years, which is great to see. They have a high growth rate of expected to perform at over 16% average each year over the next 5 years. And that is a great, healthy growth rate from one of the larger cloud companies on the market today. The final cloud stock we're going to take a look at today is Microsoft. This is one of the largest companies in the world. They are up over 350% over the past 5 years, and in the past 12 months, they are up 56%. Market cap of $1.63 trillion. They are a dividend-paying stock at around a 1% current dividend yield and have a forward PE of 33.48. They have seen a pullback off of their 52-week high, so this might be one of the companies on this list today that might be at an attractive price point to jump in and buy. They have one of the best income statements in the world. Total revenue has been growing at an insane rate over the past 5 years and have trailing 12 months total revenue of $143 billion with trailing 12-month net income at over $44 billion. A very high profitable company that is still expected to grow at a rate of 15% averaged over the next 5 years. Those were 6 cloud stocks that you should take a look at right now. They're all being traded at very high valuations at this current price point. So now may not be the best time to jump in and buy, but if you're looking to enter into the cloud industry, these are some brands you're going to want to know and take a look at. These are some of the market leaders that are expected to see massive growth moving forward. And these are the companies that will continue to operate through good and bad times. And as the cloud industry continues to expand, these are the ones that are going to grow with it. We saw some younger companies that are just profitable. We saw some brands that are still losing net income each and every year. And then we saw some giants like CRM and Microsoft, which are posting huge in billions of dollars of net profit each and every year. So we saw a lot of variety on this list. So please hit that like button and subscribe. I'm the Gen Z investor, and we post every single day about the stock market, so I really do appreciate you tuning in, and I will see you in tomorrow's video.